we say here on the Bloomberg Technology show, the euphoria of the IPO opening up was short-lived. Is that your conclusion as well?
I think, companies look at the IPO as a moment in time. It's a financing event. It creates great opportunities for liquidity for their shareholders, creates an acquisition currency by their stock. So I don't think they get too hung up on exactly how their stock's trading day to day. If you look at what's happening this week, we had kind of a hawkish pause by the Fed yesterday, where, again, they paused rates, but had some hawkish overtones. So, of course, that's going to drive the macro. That's going to drive some of these stocks. But when you look at the pipeline that we've got of some great companies lined up to get out to the market, both in Q4 and a really strong pipeline in the first half of next year, I think there's still a lot of reasons to be optimistic. The VIX continues to be relatively low. Indices are still well up for the year. And I think companies that raised capital back in 2020 and 2021 at arguably some pretty healthy valuations, they're going to need to go back and raise another round of capital. And so it'll be a choice. Do they want to raise that capital privately, or do they want to tap the public markets? And I think there's a lot of reasons to expect that many of them will come to the public markets.
Speaking to your colleague Karen last week on the day of the Arm listing, Jeff, and when you're looking at 157 active S1s or F1 filings, how many of those companies that are eyeing the markets are going to have to use the playbook we've just seen, cornerstone investors, limited supply, to ensure you get that initial pop, given, well, Instacart is on the downside already?
Well, look, I think it's all about kind of how you want to build your book. Companies are always going to want to have those long-term anchor investors. There's always going to be room for some companies or some investors that are going to be short-term in nature. And that's because, honestly, when you look at the opening cross, where we're bringing together buyers and sellers for that all-important first trade through our technology called the IPO book viewer, the only people that can sell into that transaction are the people that got shares in the IPO. So there's, of course, going to be buyers that got fewer shares than they wanted. Those are going to be the ones that are looking to acquire more shares. And then you've got to have some sellers in there as well. That's why we see the stabilization agent sometimes taking an hour, 2, even 3 hours to open these stocks, because a lot of times it's having to flush out the sellers and find people that are looking to unload the stock, in addition to all the long-term shareholders that they bring in through the IPO. Yeah,
that was a key narrative that we're talking, well, this time last week around Arm. Jeff, I'm interested, therefore, as to who's coming in to want to be that demand, that marginal purchaser. Is it getting more retail interest? Does it largely tend to be the institutions that are willing to take the risk right now?
Yeah, I think it's really the institutional investors that are going to be the major buyers of IPOs. You kind of look at how the class of 2020 and 2021 performed. Obviously, a lot of those didn't turn out the way that the investors were hoping to. Now you come into this year, again, the indices are up, the volatility is low. They're going to be looking for ways to differentiate, and that means they're going to have to take some risk in terms of some new issues. So we see a lot of demand on the buy side. I think really what it is, it's the companies coming to market, the bankers kind of adjusting the valuations to match the expectations of the market. And of course, that all-important narrative around profitable growth and not just growth at all costs.
I want to go back to something that Caroline pointed out, that if there is anything in common across the last week, it was the cornerstone investor, the small float. But I get what you just said about the buyers, but some of these IPOs were like 10x oversubscribed. Why is there not the same 10x demand 3 days of trading in?
I think there's always going to be buyers at different price levels. And again, what you have to remember here is that companies are laying out their vision for the future. They're saying, here's where we can get to in terms of revenue, in terms of earnings. And so the investors are going to be watching not just in the first few days after the IPO, but the first few quarters. And that's really what's going to determine the success of these companies is, can they come out of the gate strong? Can they hit their numbers in the first few quarters? And I think that's really what's going to tell the story IPO market versus the first few days of trading.